Hey guys, Jeff with OptionBoxer.com. Got another video today. I want to look at the butterfly options trading strategy, and specifically I want to look at the different variations to it. Admittedly, I haven't traded this strategy all that much in my own trading, but after testing it for a while over the last couple of days, it seems like a very profitable strategy. We'll look at the different variations and the relevant back tests for those variations that I did. I didn't do any particular crazy adjustments. I didn't try to manage the position very much. I just set some simple rules in place for the back test. And in every particular instance, it came out profitable, even though there was a little bit of drawdown to be experienced on a few of the strategies. But that being said, we're going to get into looking at all the different ways the butterfly could be traded, and then possibly some of the adjustments that could be made to make it even more lucrative or more profitable. Please know that I'm not a registered financial advisor, and this video is not a recommendation to buy or sell any security or place any trade. With that, let's go ahead and jump into the chart, or let's go ahead and jump into the PowerPoint that I've created to kind of share some of the details that go along with the butterfly strategy. And then from there, we'll move over to the chart and take a look at some trades that I've got set up in the Thinkorswim in my Thinkorswim paper trading account, and then I'll keep those on the books for the next 20-30 days. And we'll come back in a month or so from now, and I'll make another video, and we'll take a look at how those performed and kind of do a little bit of a forward test before I possibly start to implement some of these strategies into my own trading. Once I do, or if I do, I'll be sure to make a video at that time to kind of document and share how the strategy is working out. But if you've watched my channel for very long, you know I usually only trade when my scans pick up on something. But most of my trades are vertical spreads, possibly the occasional iron condor. And so I don't really venture out too much. I found the ability to be profitable with those simple strategies. So I'm looking to kind of expand my horizons a little bit. I've traded many strategies over the years, but most of them I gave up before I had a chance to become profitable. And I'm learning more and more every day. Looking today at the butterfly spread, and so we're going to go ahead and take a look at this PowerPoint, and we'll run through it as quickly as we can. If you turn your attention now to the screen, we'll take a look here. So it just says butterfly spreads. It's a versatile options trading strategy, and what that basically means is that there's a number of different ways you could implement the butterfly spread to potentially make it a viable strategy. The first thing I wanted to look at was just kind of some pros and some cons. This list isn't intended to be exhaustive, but it is some of the more notable items to remember or to think about when you're considering a butterfly spread. You can set it up to be either directional or neutral. There's multiple variations, which I've mentioned several times now. There's limited risk on any of the variations. That's some of the pros. Some of the cons: potentially slow profit potential. If you enter a butterfly spread with 30 days, you may have to wait 20 to 25 days before it really kind of reaches its profit stride. It's potentially commission heavy. If you're not used to trading four leg spreads, it can be a little bit commission heavy. If you adjust those spreads, of course, that amplifies the commissions even more so. And then there's a small max profit zone, which we'll take a look at the profit and loss diagram. So the first trade I wanted to take a look at was just kind of the traditional, just standard run-of-the-mill butterfly. And that was just a neutral butterfly, buying one leg really far in the money, selling two calls or puts right at the money, and then buying one further out of the money. And for all of these, you'll see my back test result there. I used a $20 wide with a $200 stop. Wasn't particularly fun, or wouldn't have been particularly fun if I had traded this in real time. All of these back tests were done in 2020, so you'll know that early on in 2020, February, March, April timeframe, the market kind of cratered with the COVID pandemic and all that craziness going on. We took a string of what looks to be 7 losses in a row or 8 losses in a row before hitting 2 really, really big winners, which of course left us profitable overall strategy here. Again, not a comprehensive back test, only 10 different trades. You would want to run this through probably 1,000 or maybe 100 different trades over multiple different market conditions. Only had a 20% win rate, so that's nice to see that we were still able to come out with a profit. But again, if I had traded this in real time, I would not have enjoyed losing this many trades in a row. More than likely, I would have abandoned the strategy, and I think most of you would agree, before I ever had a chance to win these 2 last trades that ultimately boosted us back into profit. But I did that back test over SPY, and I kind of just randomly picked SPY, QQQ, TLT, and IWM just because they're very liquid. Looking at the next spread, we had the directional butterfly spread. Again, some of the pros for this was it's directional and of course limited risk. You can see a little bit better on the win percentage, profit and loss even better. and then still the same number of trades. Was able to get a couple of big winners along the way, and those of course helped me earn a better profit and loss. Same $20 width, $200 stop, and we'll look at the construction of these more in depth. But I just wanted to run through the back test results and kind of talk about the kind of the nature of the different variations. But that is a directional butterfly spread. Basically, what you're doing is you're setting up the butterfly, whether you're using puts or calls. If you're bearish on the market, you would use puts. If you're bullish on the market, you would use calls. And I'm just setting the butterfly up out of the money. And the next variation was a broken wing butterfly. You can see I used a little bit different structure here, $5. So I bought a long call out of the money or right at the money, and then $5 below that I sold 2 short calls, and then $10 below that I bought another long call, or vice versa if I had used put. But the features or some of the pros here of the broken wing butterfly was it's directional. It lose only in an adverse price move. So if you know anything about options, there's really kind of 3 market conditions where you can make money or lose money, and that's either bullish, neutral, or bearish. Well, using the broken wing butterfly is similar to short verticals. Price doesn't move too far in one direction, you can still make a profit on that short vertical. Well, broken wing butterflies are kind of a similar position. Market remains neutral or goes down, and you've got a bearish position on, then you're going to make money. If it goes bullish, then of course you're going to lose money. IWM was the asset I traded this strategy with, and you can see because I set it up differently and I kept my stops a little bit tighter at $100 loss. I only profited $199, but I had a high win rate, so more often than not, that's probably going to be the strategy that I would lean towards, just because I like to see the winners coming in. I know that I'm doing okay as long as I'm making money. And $100 isn't a particularly tight stop, and it was nice to see that only 2 of them went to $100 loss. The iron butterfly spread, probably my favorite of all of them. I really didn't expect that it would be. But the iron butterfly is actually taking calls and puts and trading them. Create a butterfly where you basically sell a short put right at the money, sell a short call right at the money, and then buy the wings out of the money, either lower in price for the puts or higher in price for the calls. It was nice to see that it had a high winning percentage. It looks like 4 of the trades went to a max loss or to my stop loss point, and the remainder of the trades actually showed great profitability. I did that on TLT. With that being said, we're going to go and jump into the platform now, and you can see I've got a SPY pulled up here, and so we'll just start with SPY, and I'm just going to recreate these positions so we can analyze them together. So I'm doing a broken wing butterfly here. That's 5 points wide, and then you can see I went 10 points wide for the other one. So I bought the 420, sold 2 of the 425, and then bought the 435, and that comes out to a 52-cent credit. So you see, as long as the market doesn't go above 430, really above even my short strike, so that's kind of nice. If it pins it right at the short strike, I'm going to make the maximum profit, which you can see here is $523, which is virtually unlikely. It's nice to see that before I start losing money, price has got to rally all the way up to 430, which means it would be up here near this second standard deviation line. As long as it stays anywhere down here, I'm going to make at least $52, and then if it finishes in my profit tent, I'm going to make considerably more. So if price goes down by $5, I'm going to lose $37. If it goes up, I'm going to make 28. So just kind of looking at this from the risk reward aspect of it, let's go and fast forward just by a week. Let's go to May the 1st. Well, you can see how this has changed a little bit. So a week from now, if it's gone down to $5, I'm going to lose 25. But if it's gone up by $5, I'm going to make 39. So as time goes by and price doesn't move against you, the risk reward characteristics of this particular trade start to look a lot better. But that's the broken wing butterfly looking at SPY. Taking a look now at QQQ, you can see I've set up just kind of a directional butterfly here. I'm looking at this market, it looks like it's kind of overbought here. I'm kind of expecting a retracement somewhere back down to this point of control. I'm using QQQ to trade directionally, and you can see I bought the 305, I sold 2 of the 290s, and then I bought 1 of the 275. So you can see right now, if price finishes here, I'll be looking at a max loss, which is only $125. You can see if price starts to move in my favor, if it moves considerably in my favor really quickly, I'm going to make $227 really, really fast. Initially, price is right here. If it moves against me by $5, I'm going to lose 29. If it goes in my favor, I'm going to make 34. But similar to the directional butterfly, let's go ahead and go out a week. If it goes against me now, I'm still only losing 29, but now I'm making 42. So the longer I'm in this trade, if it goes in my favor, the more money I'm gonna make, even if it doesn't get to my profit 10. The IWM, I'm trading the iron butterfly. So you can see I sold right at, I just wanted to use the kind of the even round numbers at 75, 80, 85, and so forth. So let's go and analyze this trade. Similar in nature to the typical, kind of the traditional butterfly is the iron fly. It looks very similar. But this would only be if you were neutral on the market. Price has kind of been range bound for a long time now. We're kind of at the lower end of this range. We may get some upward movement here, there. So I'm hoping it stays inside this range, which is kind of a tight range looking at it on the weekly chart. But that is the setup that I have for the iron butterfly. And then the last one is TLT. And for this one, I just kind of traded the typical butterfly. I bought one really far in the money, sold two right at the money, and then bought one further out of the money here. And this is the classic butterfly. You can see the loss potential here is considerably higher because I did buy that long put really far in the money, but I'm hoping price stays relatively neutral. And you can see in this instance, I'm hoping it stays between 100 and 109. That's well within the kind of the confines of the last high and low. So I'm hoping it just kind of tracks around sideways there for the next couple of weeks. At the moment, I would prefer it to kind of go higher, track higher rather than lower. If after 2 weeks I'm still inside the profit tent, you can see I'll be about 90 something dollars. The traditional butterflies like this, you really kind of have to hold them for a longer period of time. Kind of what goes back to what I talked about at the beginning. It's kind of a slow profit potential. So it takes a couple of weeks before things start to work in your favor. And odds are very high that it's going to breach one side or the other of your profit tent. And then the hope is that it's going to eventually come back. But guys, I think I've gone through the different variations at this point. I hope I was detailed enough to kind of show you what they look like and how they operate. There is, of course, a number of different adjustments you can make, but for the sake of time, I'm gonna end the video here. It's a strategy that's kind of got me intrigued. It's one that I've traded before, but again, like I said at the outset, not one that I've traded much and probably didn't stay with it long enough for it to be successful. I appreciate you guys watching. I hope everybody had a great day. And until the next video, God bless and take care.